Hello, Chasers! Welcome back to the Chasers channel, your financial information podcast for chasing your dreams and, well, maybe avoiding some tax nightmares along the way. In today's episode, we will be looking at how the use of asset finance can be a powerful tool for startups looking to purchase equipment and technology without using up their cash reserves. I'm your host, Chris Becks, a financial and business advisor with over 40 years of experience and the founder of the multi-award-winning CBEX Business Solutions for Good. This is an accounting and tax topic, and as a member of CPA Australia and a registered tax agent, I'm obliged to give you this general advice disclaimer before we begin.
The advice provided is general advice only, as in preparing it, we did not take into account your investment objectives, financial situation, or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. You should also consider the tax implications on your financial situation. Chris Becks, CPA member number 805103 and registered tax agent number 629430015, is a director of CBEX Business Solutions for Good and is authorized to provide accounting and tax advice.
Okay, now that is done, let's dive into this episode. For startups, cash is king, and managing it efficiently is the top priority for any successful growing business. One finance tool that can greatly assist with cash flow preservation and management is asset finance. Understanding how to make the most of this financing option can be the difference between success and failure for a new business, as the business owner has to choose how to allocate their scarce resources and funds for competing uses. It means that they have to decide where to double down on investments, where it's paying the highest returns first, and secondly, how to control it. Let's take a closer look at how asset finance can help. Number 1, preserving working capital. Asset finance allows startups to maintain healthy cash flow by spreading the cost of expensive assets over time. Instead of making large upfront purchases from cash flow, businesses can invest in essential equipment while keeping cash available for other critical needs like marketing, development, and operations. For example, a tech startup can acquire high-end servers through monthly payments rather than a substantial initial investment. Number 2, tax benefits and financial planning. Asset finance offers significant tax advantages and helps with budget management. Fixed payments make financial planning more predictable, while certain arrangements allow for tax deductions on lease payments, or if the assets cost less than $20,000, it can be claimed as a tax deduction under the instant asset write-off if all eligible conditions such as first used or installed ready for use are met. A manufacturing startup, for instance, can deduct equipment lease payments as business expenses, effectively reducing their taxable income while maintaining consistent monthly expenses. Number 3, qualification requirements and building credit. While startups may face challenges in qualifying for asset finance due to limited credit history, there are ways to improve their chances of approval. Building a positive credit history early on through responsible debt management is crucial. Cost considerations and depreciation. The total cost of asset finance needs to be carefully reviewed, including interest rates, fees, and depreciation. While financing might cost more than upfront purchases in the long run, the benefits of improved cash flow can outweigh these expenses. Consider assets with slower depreciation rates and look for flexible financing options that allow for equipment upgrades. To maximise the benefits of asset finance, startups should develop a clear strategy. This includes exploring multiple financing options, negotiating favourable terms, and protecting assets through insurance coverage. Working with financial advisors and brokers can help navigate any complex agreements and make sure the chosen financing option aligns with your business goals. As with any matters relating to tax, to make informed decisions, always get advice from an expert before you do anything. It's good insurance against costly financial mistakes. Thank you for listening. I'm Chris Becks, and I look forward to presenting another episode to you real soon.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram @CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.